So really quick, you guys, let's get straight into this video. Quick disclaimer, you guys. The information that I'm going to present today is not financial advice. I am not a professional. I am not allowed to give you guys financial advice. This is purely for educational and entertainment purposes only. Trading is very risky. You can lose a lot of money in trading, and if you are a beginner, you probably will lose a lot of money with trading, right? So let's get straight into this video. Have to give that disclaimer out, you guys. I just don't want any new traders or any new people who's looking into trading to think like this is just a cakewalk, walk in the park, right? Obviously, I'm here to, give you guys as much as I can give you, but you have to understand that it's a journey. I've been doing this for 6 years, still not profitable. Very close to being profitable, but still I am not profitable just yet, right? But I am at a point in my trading career where I know enough to be able to give back and, at least teach some people how to trade, at least in my opinion, right? So today we're going to be looking at Thursday's price action. Today is August 28th, 2025. We're going to be dipping into the charts and looking at some price action for today. And I'm going to also be breaking down my strategy in this video as well. The live that I just posted earlier when I did a live for the London session. If you guys want to go check that out as well, make sure y'all go check that out because I also broke down my exact strategy in that entire video. And I'm going to come back again right now and break it down for you guys one more time and show you guys the exact trades that I took today, right? So let's just start off on a daily time frame, right? I just want to show you guys on a daily time frame, what I was looking at. I always start with the daily because typically, right, when I'm forming my daily bias, and you guys have probably heard me say this a lot, so, I hate to keep repeating myself, but I have to for learning purposes, right? But, right, we had this candle right here. We broke out the bottom, and then ever since we broke out the bottom of this red candle, we have never broken out the bottom again, right? So that's simply telling me that we're bullish, right? We're bullish. And the reason why that is important is because as I break price down, as we go into the lower time frames, I'm going to be giving you guys reasons on why I was looking at certain things, reasons on, why I was taking certain trades and stuff like that, right? So let's get straight into it. I'm going to drop down into, let's just go straight to the 1 hour time frame, right? I want to make this video as short as possible, at least, try to keep it within like the 30-minute time frame because I just got done trading all day. I just got done working all day. Honestly, I don't even feel like doing this video, but I figured today is a good day to review price action simply because, there was a lot of movement in today's price today, right? So let's get straight into this video. No more talking. All right, so I'm going to put a vertical line on, let's just put it on this 9 a.m. candle so that we can always know where we at because this is the hourly time frame and everything from, this vertical line to the right is today's price action, right? And I'm going to have to drop down into some smaller time frames to really break this down for you guys. But so as you guys know, first thing that I do is, well, okay, some of you may not know, but if you watch some of my videos, you know that everything on my chart is mostly what I look for, right? First presented fair value gaps. I use the new day opening gap. I use the new week opening gap. I use the midnight open, right? I don't really use too much. I don't really just look for fair value gaps or order blocks, things like that. I pretty much use the other type of PD arrays that I believe is more significant when it comes to price, right? So let's go to the 30-minute time frame, right? And the reason why I'm on this time frame is because you guys know my process is when the bell rings at 9:30, right? When the market opens at 9:30, at least what I've been trying to do recently, because I have had times where I'm not disciplined. I'm trying to trade as soon as the market open. I'm just not good at trading when the market open at all the time. It's not consistent enough for me, so I try not to do it, right? So what I did today is I waited for the opening range, which happens from 9:30 to 10 a.m. Eastern Standard Time, right? Those first 30 minutes of the open is the range. It's very important for you guys to wait for that range before taking the trade. You know, sometimes the market is going to go without you and make you feel like, you know, you're missing out, but you have to really be patient, right? And that's what I did today. And then we can also use this range to get a projection, right? So I think this is the candle. What is it? This one? 9:32. No, this is this one right here, right? So let me mark this out right here, right? Boom. Believe it. Matter of fact, let me just drop down in a different time frame just to make sure I'm looking at the right stuff real fast. So I want to get from 9:30 to 10. I'm going to measure out this range. Okay, so this is not accurate, right? So it should be, this is the low. Make sure I zoom in for y'all. So this right here is the low right here of the 9:30 range. Right, we're now on a 15-minute time frame, so I can see things a little bit clearer. Okay, so you guys can see we opened up right here at 9:30. So this is obviously the lowest point from 9:30 to 10. This is the lowest point, and this is the highest point, right? So what I'm typically do is, once that range is done, I draw my fib from low to high, high to low. It really don't matter, but in this case, I like to draw it from low to high, because what I'm looking for is a projection of where the market could possibly go. Right, that's what I'm looking for. And something is automatically off. Just let me double check this real fast, because 9:30, we open here. I feel like something is off. Give me 2 seconds. Just trying to make sure I got my range right, because every time I come back and do this in a live on live, I feel like something is different. So let me see. We opened up here, and yeah, so that's the range right there, right? This was the high, this was the low. So I measured out this range because I was definitely looking for higher prices today, right? I was actually looking for, I don't know why it looked different for some reason. For some reason, it looks different right now, you guys. Give me 2 seconds. I'm trying to figure out what's going on. From 9:30, that is the range, though. All right, so that is the range. And I was expecting us to go up here to the 850s, right? The reason why I'm a little bit stuck right now is because earlier when I had my Fibonacci tool on this level was lower, right? It was like right here, and it got touched. But now it's looking a little bit different. I don't know what's going on with that. But essentially, I was looking for the market to go a little bit higher today. I was pretty much bullish. So I'm going to take this range off, because I'm going to go and break down some price, right? So let's go to the 1 minute time frame. All right, we need to dissect this from the 1 minute time frame today, all right? I might even have to put my let me see. Maybe I should do this on the 1 minute. Let me see. Maybe I should do this on the 1 minute. Let me see if it looks the way it looked earlier. Okay. Very strange. All right. Whatever. All right, moving on. I was trying to show y'all something. This is why I should have just left it on my chart, the way I had it the first time, because now it looks a little bit different, right? But essentially, what I did was I waited for that first 30 minutes after the market opened, right? Waited for that first 30 minutes. So first, as soon as the market opened, we had an immediate run up, and then we created a first presented fair value gap right here that I marked out. You guys see I labeled it first presented fair value gap, New York session. That is this gap right here. So we made our first presented fair value gap. We danced around from this new day opening gap, hit the midpoint, bounced up a little bit, and then we sold off, right? And this is where I took my first buy right in here. I actually had a really good entry on this buy today. I mean, I'm talking about it was almost pretty much wick entry, you guys, because and I talked about this in my last video if you guys want to check that out. But this is why using the midnight opening price is so important, and this is also why using a first presented fair value gap is so important, right? And you guys see this first presented fair value gap says midnight, because this was the first presented fair value gap that I was telling y'all about in the video that I just posted earlier, talking about the London session, on why it is important to use the first presented fair value gap from also from 12 to 12:30, right? I mentioned in that video that I used the first presented fair value gap from 12 to 12:30 a.m., right? I used the one from 3 to 3:30, which is the London session. And then I used the one from 9:30 to 10, which is New York. And then I used another first presented fair value gap from 1:30 to 2 p.m., which is pretty much still New York, but it's just like the evening session, right? And the reason why that is so important is because, you know, obviously you guys can see why it's important, right? I mean, just look at how price hits the midpoint of this first presented fair value gap and bounces off, right? So today I pretty much had a wick entry, because as soon as we got below this midnight opening line right here, then we touched into this fair value gap, I was buying. So I was like in no drawdown. I mean, you can't make this stuff up, right? I was in no drawdown pretty much on this trade. And then, right, we started to fly up. Now on the hourly, there was a big wick, right? There was a big wick on the hourly time frame. Let me see. Where is it at? On the hourly. Wait. How did I? Okay, this is why I had to put my vertical line, because it's so easy to get lost in price, right? I'm actually even going to scoot it over just a little bit. Right, so on the hourly right here, we had this big wick. So you can see, well, actually, no, it was this wick right here. It was this wick right here. So once we came down, I bought this dip, and my first target was the midpoint of this wick, right? I had this wick that I was looking at right here. This yellow line is the midpoint of this wick right here on this big red candle. Make sure I zoom in for you guys, right? So this was where I got out of the trade, right around pretty much the midpoint of the new day opening gap. And that was my first buy on one of my prop firm accounts. I think I made like $450 on that trade right there. All right, so that was my first trade idea, all based on what I talked about pretty much in all of my videos. Notice how, you know, I wasn't using fair value gaps. You know, I wasn't using order blocks or anything like that. I'm using the new week opening gap, I'm using the midnight opening, and I'm using first presented fair value gaps. That's what I'm using right now. I can show you on the 5-minute chart that, you know, yeah, you could have looked at it a different way. You could have used this gap right here, and you could have used this gap right here. But how would you know that these gaps are going to work, right? I'd rather trust the new week opening gap, the midnight opening price, and the first presented more than just these two gaps alone, right? So This is why, you know, I try to tell you guys to put this stuff on y'all chart so y'all can back test it, so y'all can see what's going on. All right, so that was pretty much my first trade. So, and then, you know, we dipped down, we bounced all the way up. I got out pretty much right here. And then, you know, it started to chop around a little bit, but eventually it did go a little bit higher. So my second entry that I had today was right here, right? Once you can't see it. Let me drop down to the 1 minute so y'all can see it a little bit better, right? Because price was moving fast. Let me drop down. So my second entry was like right here. Looks pretty small, but as soon as we got this first touch back up on his first presented fair value gap that was made today, when price came up and touched this for the first time, I was pretty much buying right here, and my stop loss was pretty much like right above this high right here. So I had a pretty good stop loss, wasn't really risking too much. And then as soon as we got a little pullback, I just sold because it was counter trend, and I didn't want to hold for too long because, as you guys can see, when it's counter trend, this is what's going to happen, right? You're going to eventually get stopped out the trade if you try to do too much. All right, so that was my second trade. I think I made like 240 or 230 on that trade. And then this trade right here, I was a little bit sad about this one because, as you guys can see, the time at the bottom, it says 11:16 a.m. At this point, I was already up on the day, and I'm trying to just practice discipline, right? Practice discipline. So I did want to take this trade, even though, in my opinion, this was an A+ trade, you guys. And like I said, if you don't have this on your chart, you're not going to see what's going on. This right here is another midnight opening price. I don't remember what day I got this from, but this was essentially another midnight opening price that I leave on my chart. I leave these things on my chart for at least a week so that I can backtest and see if the market actually respect these things. That's how I came to the conclusion on what PD arrays to use, right? That's why I use the first presented fair value gap. That's why I use the new day opening gap, new week opening gap, right? Stuff like that. It came from me leaving these things on my chart and seeing how the market respect them. And then I said, okay, you know what? The market actually respects these things really well. I'm gonna use it, right? So that's where all of that stuff came from. That's where all of that stuff come from, right? So as you guys can see, price literally wicked right above here, where, you know, I probably, you know, could have sold right there, honestly, and been felt comfortable. At least took a small position because I was anticipating a pullback, right? Price was very bullish, but because it was 11:14, you know, it just didn't feel like it was going to get to where I thought it was going to get, which was all the way up here. I thought we was going to go a little bit higher today up here at 23,850 area, but we didn't quite get there, right? And the second thing, you guys hear me talk about this all the time, is breakaway gaps, right? Breakaway gaps. Let me make sure this is the right one. Yep, this is the right, I'm looking at the right trade. So, right, and I'm gonna give y'all a gem in this. I'm gonna give y'all a really good gem in this video, right? So notice how when we touch here, we broke away, we dropped for a nice 100 points, right? So y'all know, you know, when I was looking at this trade, you know, I was trying not to be greedy, but this is how I would have approached this trade right here, because it had already hit this. It dropped down really fast. It was about right here when I was thinking about taking the trade, right? So my entry would have been like something like that. My stop loss would have been in there because I'm not expecting it to go back into this gap right here, because I'm looking at this as a breakaway gap. And if you guys, you know, if you guys want to know more about breakaway gaps, I do plan on making videos, but I'm going to give y'all a gem in this video right here so y'all can know, well, how do I know when to trust the breakaway gap? I'm going to tell you guys that in about 2 seconds, right? And then, you know, I probably would have targeted bare minimum the midpoint of this new day opening gap, maybe even just the top, right? Even if you only target the top of it, that's still more than a 2-to-1 risk to reward ratio. right? But even if you target the midpoint because there's some liquidity in here, that's a good 3 to 1. So that's why I was a little bit conflicted. I was actually a little bit mad that I missed your trade, but I wasn't really too mad because I was doing so well and I didn't really want to get greedy. And, you know, I'm trying my hardest to build discipline every day, right? Every day, build discipline, follow a system, don't over leverage, don't get too excited, don't over trade. You know, it's hard to maintain all of these things every day, day in and day out, right? But that's what I'm trying to do, right? And that's what I believe a lot of traders are trying to do, right? So I missed this trade, but this was a really beautiful one, right? I mean, this is like my bread and butter type of trade, right? We swept liquidity, we came into a key level, we had a rejection, we left gaps open. Look how fast this was. This is the type of trade I like to be in. I don't like to be inside of stuff like this. I don't like all of that. That's why I got out as soon as we went up the first time right here, because I don't got time for all of the crunchiness and then it finally goes up. I don't like stuff like that. All right. So the gem I want to give y'all is this, right? Notice how when we came up here right here, we came up here, we swept this liquidity, then we had a pullback. So what makes this a breakaway gap? What makes this one a breakaway gap, but this one not a breakaway gap? Well, one of the first things is this was the first time it touched this line all day. So normally what you're going to experience when you're using these like new week opening gaps, new day opening gaps, when price have been away from it for so long and it finally comes back up to touch it, it's going to have a really powerful reaction more times than not. But typically on the second or third time, you're not going to get the same type of reaction as you did the first time, right? But then the other thing is this. When price came down right here, notice how it was a swing low right here, right? We broke a swing low. When price came up here to sweep this liquidity, notice how when it dipped down, there was no swing low in here that was broken. So I'm watching this in real time, and this is how people get faked out, and this is how they think they seen a breakaway gap, because this looks like it could be a healthy breakaway gap in real time. You know, if you're looking at this candle, you're like, wow, this is nice. It looks like it's going down, but it never broke a swing low. Versus this one over here broke this swing low as it was coming down, right? So that's how I knew to trust this one. And that's why I stayed away from this one. Even this one over here, when this came up, for one, it didn't even sweep liquidity all the way. Gave you a little bit of somewhat of a breakaway gap, but not really, because the other thing that I told you guys, if you watch some of my videos, when I'm looking at a breakaway gap, I want to see multiple red candles, because that's letting me know that it's actually breaking away. Versus this over here, you got a little green candle right there. And then this one got another green candle. That's a clear indicator that it's not a breakaway gap. All right? Even if it tried to, make you believe that it swept through a swing low, once you see this green candle, I wouldn't trust it as a breakaway gap no more. If you guys go inside of your chart and look at any time where the market swept liquidity and then created a breakaway gap and it was an actual breakaway gap, you will notice that either most of the candles were either green or most of the candles were red, depending on if it was going up or down, right? Those are, some things that, you just pick up over time from trading and experience. So I just wanted to give y'all that gem. So I hope y'all really do appreciate that gem, because that's a really big gem right there. So all of this right here, this was choppy pretty much. I'm trying to get my trading down to where it's like after 11, maybe 11:30 at the latest, I'm done. Because I'm noticing every time I'm trying to do everything after 11, it starts to get a little bit choppy, right? And you guys could even see that in the chart, right? Price was moving so clean. They gave you one last move right here, and this is what? 11:30, literally right here. So the last clean move happened right before 11:30. Then after that, notice how everything just starts to get choppy, right? Like it's moving, but it's not really going anywhere. right? So that was pretty much all of the clean moves that happened, pretty much. And then right here, late day, um, because I did ended up buying like 5 Apex accounts. Make sure y'all go, click that link in my description. Apex have a sale right now. You can get 90% off. Pretty much, I bought like 5 accounts. They all was like $18 each, right? And then they have a really good deal on the activation fees and the reset fees as well. So make sure y'all go check that out, and use code TRUCKIN to support this channel. But let's get back into the breakdowns, right? So I think the last trade I took on my Apex account was right here, right? Price was starting to stall out, right? We had came down. We made a little bit of a fair value gap in here. And I was looking for a price to come back down because I wanted to buy. Like how it came right here. Same type of idea, you guys. I'm looking for a price to come down to a significant level and then bounce, because I was still looking for higher prices today. I thought we was actually going to get there, but once I started to see all of this, and this happened like right before the market closed. So once I started to see all of that, I pretty much knew, yeah, it's not happening. All right, so I took this sale. I made about 200 on this sale, and then I got chopped up in here trying to take it some more, and it just wasn't working. And then right here is where I got it all back, because at this point, after I got chopped up, I was down like $100 on my Apex account, and then right when it dipped below here, look at the time, you guys. That's 4 p.m. So I was being a bit of a degenerate. I'm not gonna lie. But I was also trading in different prop firm accounts as well. So because I had just got those Apex accounts, I did make a profit. I'm not going to lie. I'm just telling you all the truth, right? So I took this degenerate trade, and then as soon as it bounced, I just took that right there, and I got out of that trade, right? And so if I take y'all to the 15-minute time frame, right, there was an order block in here. So I was hoping that we was going to leave this gap open on the 15-minute. I wanted to see this kind of behave somewhat like a breakaway gap, and I was hoping that maybe the last 30 minutes of the day we would have got this pullback right here, and then we could have bounced for an extra 100 points, came up here and swept this daily high, and then got above this midnight opening price right here. That's what I was hoping for a late day move, but apparently the market was extremely exhausted, so I guess it just ran out of gas, couldn't really get there. But I still was able to pretty much take this little order block play, fair value gap in there, midnight opening, first presented, took that little small bounce. It is what it is, right? So those were pretty much all of my trades for the day, you guys, right? All of my trades for the day. Notice everything looks pretty much the same. I didn't say, I got in the middle of the range, right? I got in literally today at the bottom of the range, so right here. Then when I was selling at the top of the range and then getting out real fast, right? So that's another thing, another gem I want to give you guys, because, I used to make that mistake a lot, trying to, take trades in the middle of the range. It just never works. Never works. So the strategy ultimately is this, you guys. You got to wait for that first 30 minutes, right? From 9:30 to 10, stop pushing the button. Stop pushing the button, right? And if you're struggling with that, start using the first presented fair value gap. You literally have to wait for that thing to be created. Sometimes it can happen in the first 5 minutes. Sometimes it takes the first 10 minutes or the first 15 minutes. Wait for the first presented fair value gap. Wait for the opening range to be completed. It's not that you can't make money trading pre-market or trading as soon as the market open, but you want to develop a system, something that you can follow every day and build discipline, right? Because you're going to make mistakes naturally. We all make mistakes. I'm not sitting up here as a millionaire trader, right? I make mistakes all the time, but I'm just trying to simply kick with y'all and be real on everything, right? And if I can help accelerate, you know, somebody's journey, right? So that's pretty much it. That was pretty much all of the trades that I have for today's breakdown. Just wanted to give y'all, you know, my strategy, what I do every day. Pretty much, even when the market is closed, I'm looking like right now, you know, I'm getting ready to go to sleep soon, right? But it's currently 9:55, right? So I'm going to be doing the same thing that I just showed y'all in that London session video. From 8 p.m. to midnight, I'm going to be looking at this range. And then from midnight to 12:30, whenever I wake up, I'm going to wake up. I'm going to put that first presented fair value gap on my chart. I'm going to put the midnight opening price on my chart unless it's somewhere already near another midnight opening price. If it's already near another one, then I'm just going to say forget it, right? But I pretty much follow these same steps every day. Why? Because notice, this first presented fair value gap is from New York session, the evening session. This one was from the morning. This first presented fair value gap was from London. And then this one was from the midnight, from 12 to 12:30, right? So notice how price respected these levels, right? Price really respects these levels. I mean, obviously there's other ways of, you know, reading the market. You know, you might be able to use this 1 hour order block. If you just want to keep it simple and use 1 hour order blocks, fine, do you, bro. But the reason why I advise against that is because order blocks by themselves are not consistent. You're not going to find the type of consistency that you really want if you're just looking at the market like this and you're saying, you know, when the market pull back here, I'm just going to buy this order block. It's not good enough. At least not for me, right? I want y'all to be better than that. I want to be better than that, right? So I'm just trying to give y'all a system that y'all can follow, right? But you have to really follow it. You have to really try to use these PD arrays every day. I mean, you have to back test them. I mean, I can give y'all the game plan, but I can't do everything for you. All right, so once again, the strategy is when that bell open at 9:30, from 9:30 to 10, sit on your hands every day. From 9:30, now when 10 o'clock come, you're going to measure out that range. If you're looking for the market to go up, you're going to take your Fibonacci tool and you're going to measure out the range like this, right? And then, you know, you're going to have projected ranges for you to find take profit levels, right? It's not going to be perfect every day, but it's going to give you an idea of where the market can go. And, you know, when you're looking at these levels, you can go to the left and see, okay, is there liquidity over there? What's over here that can possibly make the market go up here, right? If y'all want to see my Fibonacci settings, I can show y'all my Fibonacci settings right here. This is my Fibonacci settings right here. If y'all want to check that out. All right. I'll leave it up on the screen for 2 more seconds, right? You can screenshot it, but these are my Fibonacci settings. I use all of these green ones as pretty much projected ranges. That's why they're green. They're pretty much take profit areas. This yellow line or this yellow box is my 50% level. This is my 75% level. This is my 25% level. The 0 and the 1 is pretty much the bottom and the top of the range, right? Bottom and the top, right? So those are my Fibonacci settings. If you guys want to use that, all right. But so then you measure out that range, right? So then when you measure out that range, once you figure out the bias, once you have the first presented on your chart and you can see, you know, from the daily bias, you say, okay, I think we're going up today. So if you think we're going up and then the market makes the first presented fair value gap all the way up here, as soon as it comes all the way down here, all right, let's go back into the 1 minute. All right, if you have a bias, and this is why the bias is so important, because if you don't have a bias, when the market starts to fly down like this, you're going to start thinking about selling. Right? You're going to be like, oh, we're just getting ready to crash and burn. Right? You might be too scared to take this dip buy right here. But with the tools that I'm trying to give you, you're going to be able to trust that, hey, I'm buying right here at the low. Market pulls up, got a little order block right here in the 1 minute. That could be your first take profit right there. As soon as it hit that, don't be greedy. Take the profits. Some of y'all, and I do it too, so I'm not trying to talk bad on nobody, but we get greedy. I'm not going to lie. I get some, like, anytime, well, not anytime, but most of the time when I'm trading really bad is because I'm not taking profits. That's the truth. Most of the time it's because I'm trying to hold for too long, or I just can't accept the fact that I made a mistake, don't want to close the trade, right? I mean, it happens to everybody, bro. It's nothing to be ashamed about. The point of this whole trading thing, and it's a journey, you know. I'm here to try to help as many people as I can, but, you know, I know it's hard, bro. Like, it's nothing easy about trading. Shout out to Melissa. She said, love your explanations. He said, thanks, bro. Cytosine. I feel like I always pronounce your name wrong, and I'm sorry if I do. Definitely appreciate all of the gems. I had no idea NASDAQ was making all-time high after noon. Does Trade Locker also have that feature? What feature are you talking about, Melissa? He said, no cap, you should give us a back testing session because I be getting lost on what to do, on what to consistently look for, bro. Definitely, bro. You know what? That's probably what I'm probably going to end up doing this weekend, just a complete back test session. And you know what? I might even just use a completely blank chart. But, you know, I know this chart is a little bit chaotic, but I try to use these charts because if you go to my last video, a lot of these levels, bro, I'll leave on my chart. Like, if I zoom out, look how much stuff is on my chart. I have new week opening gaps from June 22nd. I have liquidity marked out from years ago. No, I'm just joking. Not years ago, but I leave these things on my chart so I can backtest them. If y'all don't leave that random order block from the 1 minute time frame on your chart. Don't do that. Like this right here. Okay, this is a new day opening. I was almost gonna delete this, but anything that y'all see me leaving on my chart is gonna be either a first presented fair value gap, new day opening gap, or a new week opening gap, or it's liquidity. Right? These pink lines are all liquidity. Right? These blue lines are daily highs or daily low. Right? I used to have so much more stuff on my chart at one point. I'm talking about my chart used to be overly packed. Melissa will tell you, like Melissa, tell them in the chart. I couldn't even see the candles at one point. But I pretty much had to go through that point. I had to go through that phase to figure out what works best and what don't work best. And eventually I realized fair value gaps ain't all of that by themselves. You know, order blocks ain't all of that by themselves, right? You want to use these gaps, the new week opening gap, new day opening gap, stuff like that, right? Y'all know I'm gonna keep on saying it until y'all really understand it. Right, and these gaps, this is why you have to be there on a Sunday when the market open. Right, when these gaps happen, you have to be there so that you can keep them on your chart. Right, so I'm not gonna really get too preachy, you guys, but because I did get a little bit distracted, but yeah, just try to follow that process. Wait the first 30 minutes, market open. Measure out that range, right? Have a daily bias. If you don't have a daily bias, it's fine. Don't take the trade. Just I'm telling you, you'll be so much happier just missing that day, right? Or if you're unsure about the daily bias, that's what I use the first presented fair value gap for, right? I use that first presented fair value gap to kind of help me figure out where is the market trying to go, right? At least for this session. And that's pretty much it, right? That's pretty much, I mean, obviously I could talk about so much more stuff, but I'm trying to keep this as simple as possible because this is really advanced stuff. You know, I'm not even going to talk about the basics. I'm not here to, this is not a channel for the basics, right? I'm just be honest with y'all. My channel is for ICT students that are currently learning ICT concepts and they kind of want the like accelerated course package. Cause you know, ICT, he does a lot of like stuff to where, you know, he give you the gems, but you gotta watch a 4-hour live stream to get a couple gems. And it's worth it. I'm not saying it's not worth it. I did it. So I'm just trying to simply help other people not have to do it as much so that they can figure out what really works the best. And don't take my word for it. You got to go back test it on your own. You got to go into the charts on your own. You got to put the work in, day out. But ultimately, what I'm really trying to get at more than anything, because if you don't if you don't get anything from this video, what I want you to get is, right, you have to develop a system. That's one of the most important things you have to do. Develop a system for yourself using his PDF, using what ICT teaches you. That's one of the top things that I feel like I learned from ICT was, you know, because he don't really tell you to do, like, he don't tell you to do things the way I'm trying to tell you to do it right now. Right? I'm pretty much giving y'all the system that I created using his concepts. He's not going to do all of that, right? But I'm just trying to help as many people as I can. Melissa said I couldn't see nothing on your charts. I couldn't see anything on my charts, right? You know, so that's pretty much the video, you guys. I would appreciate y'all if y'all leave a like, subscribe to the channel. If y'all ever buy a prop firm with Trade Day, Apex, Funder Pro, Alpha Capital, just make sure y'all use code trucking. That's all I ask for. Use code trucking. Like the videos. We're going to have more stuff coming, you guys. I'm still on the road. I'm definitely going to be back on the community post real soon. You know, I've been pretty much on the grind, y'all. I've been pretty much on the grind. I'm still working on my prop firm account. I'm in some profits. I'm still floating a little bit of profits. But, you know, the reason why I haven't passed it, I'm going to be honest. Because I even me, bro, like, I have a system, and sometimes I don't even follow it. I'm just going to be honest. The other day, I got smacked on my prop firm account just because I tried to trade as soon as the market opened. And the worst part about it, I almost hit my max loss. And the trade idea that I should have waited for, it played out so perfect. I was like, damn, why didn't I just wait for that trade? But like I said, none of us is perfect. It's going to be okay. Bro, I done blew so many prop firm accounts. I'm scared to even tell y'all how many prop firm accounts I've blown. It's sad. This is why I try to speak from experience and tell people, if you're getting into trading, if you're new, if you're not new, it don't even matter. I try to tell you, try not to put too much money into this until you actually learn how to do this stuff. Because you're going to lose the money. It's almost guaranteed. So, hope y'all enjoyed this video. I appreciate everybody coming in as soon as I'm getting ready to check up out of here. Make sure y'all drop a like as well. Don't forget to use code trucking. And I'm going to see y'all in the next one, man. Peace out. Oh, come on. What is this? I don't want to see this.